Hello traders, it's Thursday, September of 28th. This is Alan Hong, market analyst of GKFX Prime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So the first instruments we're looking here is dollar index in 4-hourly chart. So the US dollar index was rose against a basket of major currencies on Wednesday after President Trump and Republican leaders on Wednesday revealed details of a plan for tax reform, which helped offset earlier weakness following a mixed bag of economic reports. So Republicans in the US Congress and the White House unveiled plans to change American tax code in a proposal that slashed tax on business and wealthy, lowering the corporate rate from 35% to 20%. So investors, however, was milled over the lack of detail on how tax reform will be funded, and feels that key elements missing from the plan could invite pressures from support industry groups and lobbies. So the framework for tax reform came just hours after a pair of mixed economic reports forced the greenback to retreat from a one-month high. So according to the Commerce Department said on Wednesday, non-defense capital goods order excluding aircraft, a closely watched proxy for business spending plans, was rose 0.9% last month after an upwardly revised 1.1% increase in July. And meanwhile, the housing sectors continue to weaken as the National Associations of Realtors pending home sales fell 2.6% to 106.3 in August, and that was the lowest level since January 2016. Well, the euro declines against the US dollar 0.52% to traded around 1.1733, which is its lowest level since August 18th, as investors were still digesting the fact that German Chancellor Angela Merkel will be facing months of coalition talk to try to form a stable government. So political risk in Spain also weighed on the euro, with the Catalan government planning to hold a referendum on whether to break away from Spain on Sunday, despite oppositions from Spanish authorities. Canadian dollar was weaker against the US dollars on Wednesday, so with the pair US dollars against Canadian dollar gained 0.63% to trade at around 1.2429. After the Bank of Canada Governor Stephen Poloz insisted that there is no predetermined path for rate hikes, and this was dampening the expectations that the central bank would hike rates at least once more this year. The safe haven Japanese yens continue weaker against the US dollars, and with the pair US dollars and Japanese yens rose 0.39% to trade at around 112.69 as easing geopolitical tensions on the Korean Peninsula reduced safe haven demand. The kiwi was gained higher on Thursday, traded around 0.7205 against the US dollars, up 0.08% after the Reserve Bank of New Zealand held rates at a record low of 1.75% on Thursday and called for a weaker currencies. So the Governor of Reserve Bank of New Zealand, Grant Spencer, said in a statement accompanying hike first rates decisions since previous Governor Graham Wheeler down this month at the end of his 5-year terms. He said that a lower New Zealand dollar would help to increase tradables inflations and deliver more balanced growth. So the decision came just days after an inconclusive national election that left the country not knowing which parties would form its next government. Having a tad in commodities markets, the gold price was fell sharply on Wednesday, down $13.18 or about 1.02% to trade at around $1,288.46 a troy ounce amid a rally in the dollar on the back of rising expectations of a year-end rate hike and tax reforms. So expectations grew that tax reform will be implemented sooner rather than later, supporting a move higher in dollar, and this was pressuring the gold price as Republicans in the US Congress and the White House unveiled plans to change America's tax code in a proposal that slashed taxes on business and wealthy. So dollar-denominated assets such as gold are sensitive to move in the dollars, and a rise in the dollar make gold expensive for holders of foreign currencies and thus reduce the demand. that added further pressures on the yellow metals amid an uptick in expectations for a Federal Reserve rate hike later this year, following economic data showing the economy continue to strengthen. So, according to the Federal Reserve Rate Monitor tool now, nearly 80% of traders expect a December rate hike, compared to about 60% a week ago. While the oil price was continued its upsides and rallied higher on Wednesday, with the US West Texas Intermediate crude price ended 26 cents or 0.5% higher after crude stockpiles in the world top oil consumers unexpectedly drew down, with refiners coming back online following Hurricane Harvey last month. So according to the US Energy Department said on Wednesday, US crude inventories fell to 1.8 million barrels last week versus forecast for a 3.4 million barrel build. The crude draw supported the oil price, and refinery utilization rates jumped 5.4% point to 88.6% of total capacity, and this is the highest rate since Harvey hit on August 25, and government data show as most facilities have come back online. So the effect of that storm, as well as Hurricane Irma, which struck Florida earlier this month, may dampen demand for some time, potentially increasing gasoline inventories, while crude stocks are drawn down thanks to renewed refining activity. So oil prices have been supported by output cuts by the Organization of Petroleum Exporting Countries, the OPEC, and other major producers, although US crude has lagged behind Brent amid concerns that US production growth could stop oversupplies. And US crude production was rose to 9.55 million barrels per day last week, higher than levels before Harvey hit the Gulf Coast, according to the data. So now let's review the highlighted economic data on yesterday's Wednesday, as well as the important focus data for today. So Wednesday, United States has released its core durable goods order for August, and it showed a result of 0.2% growth, which just met the focus. And the pending home sales as well for August was at negative 2.6% growth, which is disappointed compared to the focus of negative 0.5% growth. Alright, so the last data on yesterday is the crude oil inventories, which show a surprisingly draw on the United States crude oil inventories with negative 1.846 million. So as for today, Thursday, New Zealand has decided its interest rate decisions during the morning hours, which held the rate steady at the record low at 1.75%. So beside that, during the European trading hours, Bank of England Governor Mark Carney will deliver a speech regarding to its monetary policy as well as the plans to for the Brexit, right? So as for the North United States trading hours tonight, US is going to release its second quarter growth as well as the initial jobless claims data. So now it's technical analysis sessions. First, instruments we're referring to the Great British Pound against the US dollar in 4 hourly charts. So the sterling was fell against the dollar on Wednesday amid a rally in dollar on the back of rising expectations of a year-end rate hike and tax reforms. So the pair GBP USD was fell through the first support level at 1.344 after retrace from recent heights. So the both moving average line was formed a death cross pattern as well, signals to retrace more in short terms. Thus closing below another support level at 1.331, we're suggesting to move further lower towards the next support level at 1.322. And on the upsides, the first resistance level seen at 1.345. While the Bank of England Governor Mark Carney is due to deliver a speech later today, and investors will focus on it for further indications about the monetary policy and the countermeasures to different situations of Brexit. The single currency was declined to its lowest level since August 18th, as the masters were still digesting the fact that German Chancellor Angela Merkel will be facing months of coalition talks to try to form a stable government. So the pair EUR-USD was last traded below the support level of 1.175, signal to fall further along with the current downtrends, and we could refer the next support level at 1.167. As for the upsides, refer 1.175 at its first resistance level. The kiwi was gained higher on Thursday after the Reserve Bank of New Zealand held rates at a record low of 1.75% on Thursday and called for weaker currencies. So the pair New Zealand dollar against the US dollar was hovering a tad below the resistance level of 0.723 after retreated sharply from the previous high at 0.739. So the pair are expected to be weaker following the both moving earth line which continue pointing downwards, and the next support levels can be seen at 0.713. As for the upsides, the first resistance level comes in at 0.723, but however New Zealand is due to release its building consents data, also known as building permits, which measure the change in the number of new building consents issued by the government. So it is a key indicator of demand in the housing market of New Zealand. And Aussie was fell sharply against the dollar on Wednesday following a closure below the support level of 0.793. So with another closure below the support level of 0.781, we're suggesting for further downside and probably will fall further towards the next support level at 0.773. As for the upside, refer back 0.793 as its first resistance level, and while traders will eyes on the private sector credit data which due to released by Australia on Friday, which measure the change in the total value of new credit issued to consumers and business in Australia. The safe haven Japanese yen continued weaker against the dollar, with the pair USD JPY rose higher on Wednesday as easing geopolitical tensions on the Korean Peninsula was reduced the safe haven demands. So the pair remained hovering above the support level of 112.7, additional with the bullish signal showing the MACD indicator suggesting for further upsides. So we could refer the next resistance level at 114. And on the downsides, we can still refer 112.7 as its first support levels. It is expected to be more volatile on Friday due to Japan will release a series of data including data for housing sectors, industrial sectors, and also inflation. Commodities, the gold price was fell sharply on Wednesday amid a rally in the dollars, and the target at the Fibonacci retracement level of 50 or $1,280 has reached on Thursday Asia hours. So closing below this level will provide a signal for shifting trend directions become downtrends, and it is suggested to fall further. And the next support level will be set at $1,263 a troy ounce. On the upsides, the first resistance level comes at the psychological level at $1,300. On the other hand, US is due to reveal its second quarter goals later tonight, which might bring further indication to traders on the dollar-denominated asset. While crude price rallied higher on Wednesday, with the US West Texas Intermediate crude price ended 26 cents or 0.5% higher after crude stockpiles in the world top oil consumer unexpectedly drew down, with refiners coming back online following Hurricane Harvey last month. So looking into 4-hourly charts, oil price remained hovering a tad below the resistance level of $52.40 a barrel, and closing above this level will provide a signal for continuations of uptrends and probably will surge further higher towards the next resistance level at $53.70. And on the downside, the first level comes in at $50.80 a barrel. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.